Now, let's just focus on the BFSI space, the banking space really. BNP Paribas has said that opportunities are hiding in plain sight. HDFC Bank is their top pick with an outperform rating, and they got a price target of 2,410 rupees in the stock. Let's discuss about this name and the broader space as well. Santanu Chakrabarti is India analyst, BFSI with BNP Paribas. Santanu, great to have you with us here. Before we get into some of the nitty-gritties of what you have put out in your report, at a slightly higher level, have you adjusted your forecast of the net interest margins for your coverage universe a little higher in light of the fact that compared to where we were at the beginning of this year in January, I think the markets kind of adjusted to the fact that, we will not see deep rate cuts or anything, if at all, So does that give a bit of a lift to NIMs across the universe, across your coverage universe? Santanu, go on.
Thank you for the opportunity. So, we have to keep in mind that delayed rate cuts are a double-edged sword for them. And you're absolutely right that your FY25 NIMs will look better if you get the cut in October instead of August. But that would take a little sheen of what FY26 looks like. You see, the interesting thing about net interest margins is that it actually bottoms out probably a quarter after the rate cuts happen because of a simple reason that nowadays so much of our lending is repo rate linked, right? Whether it's some of the prime corporate loans, whether it's the mortgages, and therefore some of that prices down absolutely almost immediately, right? So please keep in mind it's a double-edged sword. I mean, of course, rate cuts happen. Hopefully, CASA picks up from there. There's greater momentum in high-yield loans. All of those are good things, but just keep it in perspective that rate cuts are not a bringer of immediate joy.
Hi, Shantanu. Good morning and good to see you. What about this toss-up between the private versus public sector banks? You had the private banks that underperformed, but maybe part of that good news with regard to the PSU banks is in the price, and maybe those ratios don't look as good from year on, from the second half of this year. That's FY25. How do you see things panning out?
I think the one-year forward earnings prism, for better or for worse, has been the driving factor for the banking industry as a whole in their stock prices. If you look at did we have a bad FY24, for example? No. On earnings growth, we had a pretty good FY24. Did we have a equally good FY24 on stock prices? We didn't. And the reason to me is very simple, that the eye was very much on what FY25 growth looks like. So my key thesis is, the flip side of this should play out in FY25, where FY25 in itself may not look great on earnings growth, purely from the margin moderation which is happening. You're not talking about anything else on asset quality or anything else, or growth slowing down, purely margins. Then FY26, as margins moderate back upwards from the cyclical lows, is when you're going to again get a little bit of an earnings spike and probably a re-rating through the financial year. That's been our thesis. Now, as far as the PSU versus private thing is concerned, look, I mean, we just finished an extensive set of meetings both in India and outside, and the appetite and interest in PSU names is really stunning, and it is in some sense an exact inversion of probably what would have happened 5 years back, where almost any questions that you might raise at any point about any PSU or their history, or maybe longer term persisting structural problems, are either brushed aside as things that are getting incrementally fixed in India at a fast rate, or essentially that why are you worried about it now? Why don't we worry about it when the time comes 2 to 3 years from now? And the exact opposite stands true for names like Bajaj Finance, for HDFC Bank, where everything is kind of viewed through this prism of radical skepticism, right? That, is the NIM 3.65? Is it 3.7? Can it mobilize 1.66 lakh crores again? Okay, it may not be able to do it in Q1. But what is the fine number? Is it 1 lakh crore? Is it 1.5 lakh crore? Questions going way beyond this, right? And that was a
Sure.
that's why I'm saying that the opportunities are hiding in plain sight, because you're using two very differential standards on asking questions and valuations for the two subsections of the BFSI space.
Got it. You have tracked the NBFC space for very long as well, Santanu. I wanted your thoughts on what's happening with MLM Finance, right? I mean, they've deferred the board meeting. There is a fraud at one of their branches. From an investor standpoint, a long-term investor standpoint, how do you approach it? Because MLM Finance has been extremely volatile in the past, reacting very severely to any kind of news flow. But your thoughts here?
I don't want to comment on the stock price, etc., because it wouldn't be appropriate given that I don't cover it. But I think broadly, any event that comes out in a financial services business, which raises question marks about processes, etc., will be generally taken fairly seriously by the market, and the burden of proof generally shifts to the company, and that's a challenge we have seen in many cases. I mean, milder cases. Also, we have seen, even in where companies have remedied these things well, stock prices take some time to come back. And, essentially the burden of proof will always lie with the company.
In NBFCs, Santanu, what are your top ideas?
So Bajaj Finance is our top outperform. And again, I mean, here, when I went and spoke to clients, so many of the investors tell me that, look, Shantanu, there's no way this company can continue to grow high, not because of, something on demand or something on competition or something like that, just because RBI won't allow it to. And I found that a fascinating pushback, quite simply because, here's a company that's growing at 34, putting out a presentation where one whole slide in bold letters is, we're going to grow at 25 to 27% for the next 5 years. Now, nobody is, privy to the conversation that RBI would have with any other company. But does it make sense to you that, given that conversation, any company in the world would go out and tempt their fate with regards to the regulator? It doesn't make any sense to me. And so that's where the opportunities are, because if the pushback was on, do you think, Shantanu, that this many customers can be added? Or, is the upsell possible? Or what role will competition play? Now, those are legitimate questions, and of course, people will have different opinions about those things. But some of the stuff is really edge case out there, things that I have heard about large caps in this particular phase of the market.
That's interesting stuff, really. Santanu, did you, in clients, did your financial services come up?
We don't yet, again, have coverage on the name. I mean, it's still an early stage company. But of course, when clients speak about, competition in a generic sense, they're thinking of every single entrant into the Indian financial markets. And I think that can play a suitable role. Is evaluated, if not in terms of what the business is today, but in terms of what it brings to the table, whether that in some cases may be capital, in another cases may be specific kinds of data that others do not have, and so on and so forth. Or it may be just capital wherewithal. All those parts come up, but not in a recommendatory sense, of course.
Okay, what about Axis Bank coming out with numbers tomorrow? Any thoughts there?
Actually, we are expecting a small disappointment in Axis Bank. Not very large one, mainly because I think the market's probably building in the consensus seems to be building in slightly higher net interest margins than what we expect, which is a function of essentially how much of, say, their organic CASA plus Citi acquired CASA they're able to hold on for the quarter. My numbers are a little different. Having said that, Axis Bank is my third preferred pick within Indian banking, that because of one very simple reason. It is the highest liability beta name out there. It's 16% short-term borrowings. And short-term borrowings, once rates get cut, will get completely repriced in 2 to 3 month period. So let's say if it's a 150 basis point drop on the overall yield curve, that goes straight to 16% of your funds in a 3 month period. That's a significant number. And it's much faster repricing than what you'll see in most other names.
All right, we'll let you go on that note. Santanu, thanks a lot. Appreciate your time here on CNBC TV18. So that's the word coming in from the banking and the BFSI segment analyst.